AMC stock is clawing its way back into the end of trading. As we reported in the last video, AMC stock was down about 3%. Currently, the stock's only down about 1%. Still a down day following Friday's really red day of like 14.5%, including that down move in after hours. This is a step in the right direction. Now, we have some updates in this conflict situation that's going on. If you guys don't know, this could cause markets to fall 20, 30, 40%, just depending on the severity of what comes next. We're going to get into the latest developments on that front here in just a moment, but we also have a couple interesting articles from the street on AMC stock. They say the reason AMC has fallen the last 2 trading days is actually Adam Aron's reputation taking a hit due to that scandal, that spicy X-rated scandal that did just take place. But new evidence, new technicals, new data supports AMC stock could soon break above $13 per share. So kind of going in line with what I expect. A big rally to come, and I think $13 would just be the start of another big move higher. We have your option activity, we have your Ortex data, we have everything you need to know about AMC stock and the broader markets here in this video. So do me a favor, hit the like button because it's free 99. Subscribe to the channel if you guys want to stay up to date with what is going on each and every single day, again, in the broad markets as well as with AMC stock. So first things first, like I said, AMC stock is clawing back some of those losses you've seen in the beginning of trading today. You were down over 3%. Now you're down just under 1%. AMC stock is holding its major support levels today as well at $9.42. Currently is the share price. That major support level really sitting at about $9 per share. You're holding above that. So that is really good news. Now let's kick this off with an update that we are getting right now on this conflict over there in the Middle East. But first, for those of you guys that don't understand why this is so important, well, essentially, you could see the markets fall 20, 30, 40% if this conflict were to get worse. The big reason really has to do with energy and the Strait of Hormuz. I've pointed this picture out a couple of times. You guys have probably seen this already. I apologize for being too redundant, but I want to make sure that, you know, everyone understands just the significance of this. Iran and Saudi Arabia basically control the waterway here for energy, right? This is a picture of energy tankers and, you know, the flow of energy. If they wanted to, they could stop the flow of oil of 20-30% of the world's supply. That would cause the price of gasoline, the price of oil to skyrocket, and that would inevitably cause a recession for the US economy. That's why this situation could be so bad. Now, according to OSIN T-Defender, this is a great outlet for news on the situation or other conflicts. They say, quote, sources within the Israeli Defense Force have reportedly told the Jerusalem Post that one of the primary reasons for the delayed invasion of the Gaza Strip has been the increasing worry that Hezbollah will join the war soon after the invasion does begin, with IDF Northern Command making sure that forces along the Lebanese border are prepared for a major outbreak of hostilities, which is claimed to now be almost complete. So getting, you know, confirmation that maybe this situation with Hamas, well, it might get worse here very soon. The invasion of the Gaza Strip could come at literally any time. I don't care what the markets do up until that point. That point is when you open the door for a larger conflict, and at that moment, that's where stocks likely react. I would imagine not a good reaction, probably a downside move. This comes just after Israeli artillery opened fire on southern Lebanon. So it looks like they're probably going to get involved in this conflict. Question is, does the US get involved and or does Iran get involved? That is, again, where you have a much larger issue. Other than that, it's nighttime over there on the side of the world, so we are gonna get a lot more updates later on tonight. If something does escalate and change, I will keep you guys informed. I will let you know what is going on, because this is a catalyst that could cause stocks again to fall 20, 30, 40% if the worst possible outcome does happen. So we'll keep you guys informed. Now let's get into this situation with AMC stock. Now, let's give you some of the bad news first. This article from The Street says AMC stock tumbles amid CEO Adam Aron's reputation crisis. After falling victim to a lurid blackmail scheme, AMC CEO Adam Aron has had his reputation taken a hit. AMC shares declined significantly as a result. AMC CEO Adam Aron became a victim of a blackmail scheme involving catfishing after exchanging explicit images with a woman who attempted to extort money using false identities. Despite the incident being disclosed in a 2022 federal indictment against the woman involved, the negative impact of recent press surrounding the incident led to a sharp drop in AMC shares. And I think you guys already know this situation, so I don't want to get into it too much, but that's what they say is the main reason why AMC stock has been falling as of recently, which is very interesting. It's not something I would have thought, but it definitely is a possibility. So we'll just leave that one at that. Now, this article says, could AMC stock soon break through $13? AMC's option chain is showing signs of trader optimism for the stock over the next 2 weeks, something we have heavily been reporting on here on this channel for quite a while. This says high trading activity in short-term out-the-money options and in-the-money calls indicates traders foresee a jump in AMC stock taking place within the next 14 days. Despite a significant share price drop since August, AMC has seen some recovery over the past several weeks. Expectations for a strong third quarter and projections that AMC's pre-pandemic revenue levels by 2024 and 2025 have been drivers of optimism. Meanwhile, successful equity issuances have alleviated bankruptcy concerns. The option chain. Taking a look at AMC's option chain, there's a clear difference in the trading activity between out-the-money and in-the-money calls set to expire in the next 2 weeks. The imbalance suggests a bullish trader stance on AMC shares in the short term. There's a high demand for options with strike prices at $12, $15, and $17. Each has over 1,000 contracts expiring on October 27th. Those snapping up these call options are betting that AMC stock will hit or surpass these strike prices within the next 2 weeks. When we shift our attention to the volume of put options set to expire on the same day, a notable concentration is observed at the 850 strike, which stands out as the most actively traded among other out-of-the-money strikes. With all of this being said, it is important to highlight that in general, the volume of put options is lower compared to call options, indicating a prevailing sense of optimism among investors who anticipate the upward movement of underlying asset prices in the future. Why so bullish? AMC shares tanked 80% following the company's announcement that it would convert its preferred shares, APEs, into regular shares. However, since hitting an all-time low on September 8th, AMC shares have surged nearly 50% as of October 12th. The move has largely been driven by positive news related to the company's fundamentals. One such positive driver for AMC has been investor expectations for a robust third quarter, with record-breaking box office numbers driven by major blockbusters like Barbie and Oppenheimer. This Q3, the domestic box office grossed approximately $2.64 billion, exceeding last year's third quarter gross by 37%, and trailing only $165 million behind Q3 2019, the last pre-pandemic Q3. Another noteworthy development is AMC's successful equity raise of approximately $325 million, which followed the company being granted approval to convert its preferred shares into common stock. This conversion garnered much market skepticism due to concerns about AMC's ability to sell its shares at an attractive price. Nonetheless, by selling 40 million shares, AMC managed to secure $453 million in cash and equivalents, offering a much-needed boost to its liquidity and bolstering its then teetering balance sheet. And then what's next for AMC? AMC is making a steady recovery with box office numbers gradually returning to pre-pandemic levels. Current trends suggest that the company may reach pre-pandemic revenue levels sometime between 2024 and 2025. Although AMC's share price experienced an 80% drop in just a few weeks due to a dilution of its float, the recent sharp fall appears to have been somewhat overstated. Such significant declines typically correspond to deteriorating company fundamentals, but in this case, the opposite has proven true. As of today, AMC has successfully raised more cash through an equity offering and still holds a substantial number of shares that can be issued in the near future. This has helped the company move further away from concerns about bankruptcy. So, this is interesting. The option activity is something I have highlighted basically in every single video. If you look at the Stocko tracker data, you got, for this week, in the money calls of 28,221, out the money calls of 148,000, in the money puts at 22,000, out the money puts at 93,000. On just any metric you're looking at here, the calls are beating the puts by a long shot on every expiration for a while here. Okay, there's just more option activity on the call side than on the put side. This is a 180, 360 complete change of the sentiment regarding AMC options that we've seen, in recent times, where you can look at the puts call ratio to actually see this and what has changed. So if you look at the put call ratio now, it's at 0.76. The put call ratio back here when AMC stock was going through big rallies was like half of one, 0.7, 0.6, around where we are now. This has created more calls than puts. This has created the potential for gamma squeezes, for upside pressure on the stock. What happened when the put call ratio jumped big time? You no longer seen any of those big rallies. You just didn't see it. Literally, almost to the day the put call ratio jumped, you really didn't see any other rallies. The stock traded sideways at best and then fell a lot. So with that being said, now you do have the potential to see a lot more upside pressure on AMC via the options. And I do think this could allow for more option buyers to come in as well and buy more options and buy more shares and feed into this cycle when AMC stock does finally get that bigger upside move. Now, if you do look at the Ortex data here, you guys got to remember, take it with a big grain of salt, okay? You have a short score of 58, $143 million worth of short positions currently on AMC stock. Estimated short interest of free float at 7.61%. Free float out on loan at 10.78%. Shares out on loan 21.32 million. Days to cover 1.2. Cost to borrow 1.84. And utilization of 44.28. If you take a look at some of the cost to borrow fees here today, looks like cost to borrow max around 3.5%, cost to borrow average at about 1.5%, cost to borrow minimum at about 1%. Let me tell you right now, these numbers are not true. Don't believe these as far as you can throw them, because there is no freaking way that you're going to be able to lend out AMC stock or borrow AMC stock at 3% or 1.5%. That's just not going to happen, especially since we have seen that upside volatility lately. AMC stock was trading at the low around $7.05. Now the stock is $9.46. You actually just briefly went positive for a second. Now you're back in the red by just a little bit. So these numbers are not true. You guys got to remember that. 7.61% short interest of free float. BS. That is the biggest round of BS that I have seen in a long time. Okay, so that's the current situation on AMC. I think we're very vulnerable here for any, change in sentiment by the markets, whether that is caused due to bond yields or the Fed being hawkish or the data coming out this week. Tomorrow, we're going to get some big data. We'll go over that here in just a moment. Or this Israeli conflict. Any of that has the potential to not be so great for stocks, even though today is a better day than what I even personally expected. I don't think this story is over at all. I think there's going to be a lot of volatility, probably some downside moves coming if we just want to be honest with ourselves. Now, overnight tonight at 2 o'clock in the morning, you're going to get the unemployment rate out of the UK. The trading economics calendar says this could be a big event. I personally don't think so. At 5 o'clock in the morning, you're going to get the economic sentiment index coming out of Germany. And then tomorrow morning at 8:30 in the morning, the inflation rate year over year from Canada, and then the retail sales month over month also at 8:30 in the morning from the US. Retail sales will be very important. If retail sales come in really bad, that's going to be a big negative for the markets, right? If retail sales come in better than expectations, that's probably also going to be a big negative for the markets. You really want to see retail sales come in pretty much right on expectations. That would probably be your best case scenario. Now, what you're seeing today is also the 30-year and the 10-year yields are rocketing higher. The 30-year yield is up about 9 basis points. The 10-year treasury is up about 8 basis points. So you're getting a big move higher in yields, and stocks are also moving higher. What we have seen recently is a big move higher in yields has caused a big down move in stocks, but you're not exactly getting that here today. And if you take a look at oil is down about 1%, which is good news. If this conflict does continue to spread and get bad, I'm reading something on the other screen. Oil's probably going to be the first thing that does react to that. Okay. Overall, if you are an investor in AMC stock, I like how we are sitting here. I like the fact that we are holding up support at this downtrending line. If you break under $9 per share, then you have bigger problems on your hand. You break under this line, that is not going to be great whatsoever. I personally think if we do get that breakdown, it's probably because, again, we have something negative that is affecting the markets. We will obviously have to wait and see. That's only speculation at this point. The MACD, despite the last 2 down days, Friday and today, is still looking quite positive, starting to flatten out a little bit, but still making an upward move over the last 2 days itself. So that looks pretty good. The RSI at 42.25, it's pretty neutral, but it is on the oversold side. So that does potentially lead to one of those slightly oversold bounces that could be coming. We've seen quite a few green days in a row. Things were looking really good until last Friday. So let's see if that does pick up, if that does continue. Your 8-day moving average is at $9.71 per share. That's your biggest level as far as resistance to break above. As of right now, a break above that is surely going to send you into the $10 range. Subsequently, I would think much higher than that, likely into that $15, $17 plus range. So that is going to go ahead and do it for this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. If you guys want to come trade with us live in real time, link down below in the description of this video as well. You guys have a great rest of your day. I will see you in the next one.